rewind the clock back, 2018, as we're recording this, is 2022. So, 4 or 5 years there, and you've grown significantly to $1.1 billion in assets under management. Just walk us through the trajectory, just so we have a general sense of that growth. I mean, where were you at in 2018, 2019, 20? Just kind of walk us through that trajectory.
Yeah. So I think the best way to do it is to kind of do it based on how much capital we've brought in from investors year over year. And so that very first year in 2018, we raised right at $4 million from our investors. And I will say that's probably the hardest $4 million we've ever raised. Up until there was a deal during the height of COVID that we got under contract, and then COVID happened, and so that was definitely a challenging one as well. But in 2018, we raised $4 million. In 2019, we raised $32 million, and then in 2020, in the middle of the pandemic, we raised $61 million. And then last year in 2021, we raised just right at 197 million, which was a big jump from the year before, which was kind of cool to see. And then this year so far, as of the end of the first quarter, we raised right at 110 million so far. So it's been a very fast trajectory, and so it's been kind of cool to kind of watch the growth. And there's a lot of things that we've done from a strategy perspective to maintain that growth, because a lot of times when investors see that kind of growth, they might sometimes get a little bit worried about the growth. And so there's definitely been some things that we've done to be able to make sure that we don't, grow too fast to the point where we don't have the oversight and the management to be able to monitor each one of the investments that our investors are in.
Yeah, I think that's phenomenal, right? I mean, you said from 4 million in the first year, 32 million, which is a huge jump by itself, right? That's a huge jump right there from 4 to 32 to 61 million, doubling that in 2020 to $196 million raised in 2021, right? So that is almost 4 times what you did the previous year. And as a matter of fact, if you combine all those years together, that's 100 million for the first 1 to 3 years of operations, and you did 200 million or close to $200 million last year. So phenomenal growth. What do you think the tipping point was? Particularly going from 2020 at 61 million to almost 4xing that in 2021. Is there anything you did differently, or what do you think the tipping point was to see such a large amount of growth in just 1 year?
Yeah, I think there's two things primarily that I can point to that I would say was kind of the tipping point, if you will. Number one was from the first 3 years, I was investor relations, right? I was the only one on the phone calls every single week, and spending 20, 30 minutes, sometimes 45 minutes on a phone call with each investor. And for my time, I thought that was the best use of my time. And I would still say, if I look back at it, those first 3 years, maybe the first 2 years, it was the best use of my time. That third year is where I really realized that I probably needed to hire somebody else to be able to take on some of those calls so I can continue with the strategic growth and then vision and objectives of the company. And then it's funny because my mentor at the time, probably about 6 to 9 months prior, had just hired somebody to kind of take on that responsibility from him. And so I had kind of been watching him and kind of seeing how he had done things. And he's like, it's going to be the best thing you ever do. Right. And so for me, I was like, well, I just need to do it. Because for me, I was my head was in my way. Right. Because my thought was, if I'm the person who's talking to these people and we're having the level of success that we have, then I need to continue to be that person. Because what if I don't? Maybe we don't raise as much money because there's somebody else, taking these phone calls, and the investors aren't as receptive to this other person or people that we hire on to be able to, talk to the investors. And so for me, it was very, very hard. And I had to basically just tell myself, it's okay. Just try it. If it doesn't work out, you can always go back to making those phone calls, right? And so we made our very first strategic hire on the investor relations side of things. And from, really taking a lot of load off of me from talking to investors. And that was he was hired on as an investor relations associate. And then as he continued to grow in the position, he is now our director of investor relations. And he actually has a team of 2 other people that are underneath him that are strategically placed across the United States, one in Texas and then one in California, to be able to support our investors across the United States. But hiring him on was one of the things that I think definitely was a pivotal point for us because he was able to spend full-time efforts. He was doing, 40, 50 phone calls a week with investors, where I was only spending probably, 20 to 25 investor calls a week because I time blocked, right? And so I only spent a certain amount of time. And another time I had to work on the other things with the company, with the group. And I guess probably one of the things that was the definitive that made me decide to go ahead and hire him was I had investors that I was on a phone call with, and they were like, wow, I'm actually surprised I'm on the phone with you. Like, normally I wouldn't be on the phone with the managing partner, So it was almost like a confusing thing for some of the investors because they were like, it's cool that I'm talking to you, but shouldn't you be running the company? It was kind of a disconnect for them. And so for me, it was great because it was a conversation I was able to have with like real investors saying, hey, you don't need to be doing this. I'm fine to talk to an investor relations person and having them give me all the good information that you would have given me anyway. So that was one of the things that we saw from a pivotal moment perspective that allowed us to be able to continue to raise a significant amount of capital in that fourth year.
I think there's a lot of great insights in there for not just, operators and passive investors, but really any entrepreneur, because scaling your business and figuring out what is the best use of your time, it's a challenge for almost every entrepreneur, right? Particularly in this space, right? And I certainly empathize with where you're at because it's something we're going through as well. And we're not at the point where we can, offload all of those responsibilities. And probably very similar to you, like, I feel that's an advantage, right? Me being one-on-one, being able to talk to potential investors, them build a relationship with me, because at the end of the day, we've been saying for years that people do business with people they know, like, and trust. And to your point, if you're the face, if you're the name, if you're the person who's, put your brand on the line, if you will, like, you feel like you kind of have to control that. So to be able to step back and let an employee, and no knock on an employee, but to let someone else be that face and that interface between the company and that potential investor, I understand the hesitation. It's something we deal with as well. So I'm curious of how, I get watching your mentor and watching him go through that and saying, okay, let me give it a try. But if you were giving advice to someone else who was in this position, in this role, or an entrepreneur in general, how would you advise them to get comfortable letting go of the reins a little bit and empowering someone to kind of fill in this position, given the fact that it is such an important aspect of what you do with your business?
Yeah. So this is something that I talk about quite a bit and it's funny because I tell people that I struggle with it too, as well. Even like today, there's things that I do that I really shouldn't be doing, but it's something that you're going to probably always struggle with as an entrepreneur, of doing things that you really should have other people do. And for me, it was actually early on in my business career when I had chiropractic offices. So I'm a chiropractor by trade. And when I was, seeing patients and doing everything, I'm the type of person where I feel like I can do everything better than everybody else. And it's a mental flaw, right? It's just like, I just can't get over that. Right. So I have to play tricks with my mind, if you will, or kind of convince myself that, yes, I can still do everything better than everybody else. So I confirm that with myself that, yes, I still feel that way, but I can't continue to do everything better than everybody else and continue to grow the company and have the trajectory that I want to have. And so the trick that I play with myself is I basically say, well, if I can hire somebody and they can do it 80 to 85% as good as me, then I will be able to give it to somebody else and let them do it, because I'm fine to lose that 10 or 15% efficiency, if you will, or 20% efficiency. And it's interesting because once you actually start to hire people and you get good quality people, they really do surprise you. Like we have a really good, solid core team that surprise me all the time about how well they do in their position. And I always say they're probably doing a much better job than I am. And I know several of them are doing, more than 100% better than what I would have done before. Right. So it's one of those things where from a mental perspective and a mindset perspective, you just have to tell yourself, hire somebody else. And even if they can't do it as good as you, it allows you to free up your time to be able to go and be able to be that visionary and looking for the next strategic, objective or different thing that you're going to be, working on with the company.
Yeah, great insight right there. And if you can live with them not doing it 100% the way you would do it, but still being effective and getting the results, then you can grow your business. And the other thing that you said that really stood out before was you were doing about 20 to 25 calls a week. This person is able to do 40 or so calls a week. So they're getting more, cracks, if you will, they're getting more attempts. So they're having more conversations. And even if they don't have the same closing rate that you may have, they're doing more and having more conversations. So the net positive is still going to be there for you. So really good insights. And I think that's great for any investor, any entrepreneur to understand when you're growing a business, you do have to scale and focus on building teams and systems for you to be able to do that effectively. The other side of that equation is obviously in order to go from 4 to 32 to 61 to $196 million in capital raise, you got to be talking to a lot of people and you got to be doing a lot of stuff to fill the top of that funnel. How are you coming across new investors and growing your brand and growing those connections?
So I love testing, right? And so I'm willing to spend money and risk that to be able to test it to kind of see how things work. And so we do a lot of different things to be able to attract new investors. And I will say that there's never been just one thing that has just allowed us to have a tremendous amount or a huge influx of investors that have come in. It's been I have this kind of philosophy of marketing of what I call a multimodal approach. Right. You have to have multiple avenues and multiple different ways of being able to fill the top of the funnel with leads and potential investors so that you have a huge supply of leads coming in. And when we first started, we didn't have very many leads coming in, right? We had maybe, 5 to 10 a month, and they came up to 15 and 20 a month. And, right now we usually average about maybe 250 to 275 a month that are coming in off the website that go to the website, fill out the form, raise their hand and tell us that they want to invest with us. And then in some months, it's been over 500, right? We had like 550, 600 new investors that have come in a given month. And for us, we do all 506 Charlies. And so the 506Cs are ones that allow us to advertise. So it's great to be able to have that opportunity to advertise. But it doesn't require us to have conversations with all of our investors. However, we still have conversations with all of our investors. So, just like you mentioned earlier, you want to make sure that your investors know, like, and trust you. And the best way to deepen that relationship with an investor is to have a phone call with them, even though you don't have to, and you're not required to by, SEC guidelines, if you will. We still make that attempt to get them on a phone call, discuss their investment goals, and make sure that our group is the right fit for them, because there's many times where it's not the right fit, right? But these are people that are going to be investing with us for many, many decades, and not just a onesie deal and that's it, right? And I think one of the reasons why our repeat investor rate is so high, which is usually between about 71 to 73%, meaning every deal that we do, 71 to 73% of those investors in that deal have already invested with us in a prior deal. And so they're happy and they're satisfied and they're investing in the next deal with us, which is something that we can use as a predictability to be able to acquire more and more assets, because we know kind of what our investors can bring to the table on these deals as we continue to move forward. And so that's from a perspective of like, where are we getting in and what are we doing all these for these different multimodal approaches. And we have our platform called the Multifamily Investor Nation, which is an educational arm that is actually completely separated as far as a list building perspective from passiveinvesting.com and Multifamily Investor Nation. So basically we have MailChimp that we use for our and multifamilyinvestornation.com, and we use ActiveCampaign for our passiveinvesting.com group. And the reason why we did that is that we wanted to make sure that we weren't just putting people on our list that just wanted to come watch a webinar about multifamily, right? We didn't want to fill our list of potential investors with people that were really just kind of like looking around, right? And we wanted to make sure that we only had high quality people that went to the website, filled out the form, and raised their hand and said, yes, I want to invest. So we use our Multifamily Investor Nation platform to attract new investors, but we also but one of the things we don't do is add all those new leads that come in, because we do weekly webinars. And we've been doing that for several years now, as you know, and every week we still get, 300, 400, 500 people that register for those webinars. And about 30 to 40% of them are new people that have never heard of us before. And so we don't take all those leads and just, shove them into our passiveinvesting.com active campaign account and just, hit them every single week or every single time we have a deal, right? We only we do promote it. Like it's not a really heavy promotion. We basically, in the beginning of every webinar, we'll introduce ourselves, and I'm one of the managing partners of passiveinvesting.com. And if you want more information about us, here's the website. Here's where you go to sign up. Here's where you can find out more information about my bio on our Meet the Team page and kind of see our other team members. And so it's not a very hard sale or anything. So it's really just kind of a strategic way to, if you want to invest, here's how to do it. And they have to take that step themselves to actually go to the website and fill that out. So that's one way. As the Multifamily Investor Nation, we have the weekly webinars. We have our YouTube channel we post content on. We have our LinkedIn channel. We have our podcast. We also have our online summit, which we've been doing twice a year. We did one earlier this year, which is we're going to start doing one virtual one a year. And then this year will be our first year. Next month, actually, in June, we're going to be doing a live in-person event in Charlotte, which I'm sure we'll chat about a little bit here in a little bit. But in addition to all of those, when an investor comes into our fold, we have that phone call with them. We obtain their email, their phone number, but also their mailing address. So we can now start to mail them a physical printed copy of a newsletter that we actually print up, which is usually between about 12 to 16 pages. And it's a way for us to be able to educate our investors and keep them informed of different ways that we are kind of moving with the company itself and different offerings that are available that we can send to them. And we did that because nobody else in the space is really doing that on a consistent basis. And we wanted to make sure that we had the opportunity to reach our investors, because our open rate for emails was pretty high. It was like 52, 53%. It still stays about that 50% range. And for anybody who knows anything about email marketing, that's a great open rate, right? People will pay lots of money for an open rate that high, but we have a very curated list of people that want to hear from us. But I still looked at it and I was like, that's 50% of the people that aren't getting our emails, that aren't listening to us. So I looked at it the other way. And I was like, what's another way that we can make sure that we get in front of our investors on a regular basis and be consistent with that? And the printed newsletter was that thing, was that ticket. And so we have in-house designers that design those for us and curate the content. And each one of the managing partners writes in that. And then one of the other strategic things that we do in that newsletter is about twice a year, we actually include a second printed copy of the newsletter, and we have the printer shrink wrap it and put a sticker on the outside that says that we have printed up this extra copy for you to hand off to a family, friend, or colleague. And that kind of generates more referrals, right? And that's actually kind of going back to what we had mentioned about what are some of the pivotal things. That is another one, is that there's the referrals really ticked up in that fourth year, because there were a lot of our investors had already seen a lot of the results. We had some great successful exits last year that allowed those investors that want to actually increase the amount of money that they were investing, and it allowed us to continue to grow at a larger clip than we were in the years prior to that.
And you gave so many insights just now. I need everyone to just hit the rewind button, hit that 30-second rewind button and go back to when Dan started talking just now, because he gave so many insights. It's going to be tough to recap. I can, and I will. But it's almost like just raining insights. So let's back it up, because I had a couple places I wanted to go after that, but again, it was just so rich. First and foremost, you talked about where you started. I want to come back here. You said early on, you were getting somewhere between 5 and 15 investors signing up a month. And the reason I want to just start there is it's important to understand that Dan did not wake up and just create this machine overnight. We talked about the 4 million, but you said it yourself. That 4 million was probably the hardest 4 million to raise. When you are getting started, it is not easy. And Dan has a background where he has some connections and, he can get going. So I say that and I emphasize that point to say you cannot compare your day one or wherever you are in your journey today to where Dan is today without thoroughly understanding what Dan had to do to get here today. So take the insights and be consistent and be patient and continue to test and continue to learn and continue to reinvest in your business. And you were able to do that, Dan. And that led you to the growth and the success you have now. Now you're talking about between 250 to 500 people a month signing up to invest with passiveinvesting.com. And a lot of these tactics that you just mentioned are ways that you use to help grow that investor list. You said another thing that really stood out to me. You said you do the Multifamily Investor Nation, but you keep that list separate from your investor list. And so many people just jam a list together and start blasting everybody with everything, even when no one signed up to be on the list. It's like we have a phone call, you get my email somewhere, and next thing you know, I'm getting emails about stuff you're doing. And I don't even remember, authorizing you to be added to the list. So you want to make sure that you are actually getting quality leads when you're talking to people. Let them raise their hand, let them express interest, teach them, show them, inform them. And we talk about education being such a critical thing because we're talking about large investments, right? Minimum investments, typically 50K or something along that lines. So people have to feel comfortable with you as an individual to want to partner with you and your firm. So give them a chance to learn and educate them. And that's something that you focused on tremendously and were able to get that growth. So I think that's really important. Don't try to force people onto a list if they're not ready. Let them self-select and give them the tools and resources so they can learn more about what you do and figure out if it's a fit for them. And then the last thing, you talked about the multimodal system. You mentioned LinkedIn, podcasts, virtual events, now in-person events, webinars. There's so many different things that you're doing to engage with potential investors, and you're doing all of those things. So many people are looking for the magic bullet. What's the one thing I can do? Can I post on LinkedIn? What about Facebook? Can I launch a podcast? Yes, 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 and yes, right? I mean, it's not a one thing if you want to be consistent with the results. So it's really reassuring to understand that, hey, you can do these things, but the key is to be consistent. The reality for most of our listeners is that they don't have the budget and or time or resources to do everything the way that you do. Given that limitation, where would you focus your efforts if you didn't have the same resources you had starting out?
I mean, I would start where I did earlier when I didn't have a lot of resources to be able to do it. I mean, a lot of the things that I just mentioned don't take a lot of resources. It's the thing that takes, the money that from what I've mentioned is obviously the newsletters, right? When you print those up and you mail them out physically, they cost money to be able to do that. I think with the newsletters, we're probably paying like $1.50 for each newsletter to send it out every month. And when we send out the actual investor offer memorandums to investors, we're probably closer to about $10 to $12 per package to send it out because we send those out priority mail to the investors to make sure they get it within 1 to 3 days. But outside of that, I mean, there's not really much that we're spending even now on marketing from what I've already mentioned. There are some other avenues that we're working on and we're testing that we're spending money on. And obviously when we have an offering, we'll spend some money on Facebook, spend a couple $100, couple $1,000 there, if you will, to really just right now, we're just retargeting people who have went to our website just to let kind of almost like a reminder of, hey, don't forget that we have this offering that's available. But from a significant capital outlay, there nothing that I've explained is really that significant. It's really just a resource perspective of time, right? So if you can put the time and the energy and effort into putting some of these things into place and putting them into and putting them to work for you, it doesn't really have to cost a lot of money. I would say that one thing I did mention is the meetup platform, which that does cost money. It's like $35 per month per group that we have. And we have 53 groups every we have that meet across the country and Canada that meet every single month. And so that's a significant amount of capital for us that we outlay, which, obviously if you just had 1 or 2 meetups, it wouldn't still be significant and a significant amount. So outside of that, there really isn't much that from a money or a financial perspective that really is that very costly.
There you go. Great insights there, Dan. And I think that's really actionable for a lot of people to figure out what can they get started with today that is low cost and start seeing traction in their business there. And again, the education I think is key because at the end of the day, you're here to help serve those passive investors who are looking for these solutions. We've talked about, you using 506C Charlie for your deals. Talk to me about your ideal investor. Who's your avatar, for that listener who is saying, hey, this sounds interesting. I wonder if I would be a fit for some of Dan's deals. Describe that individual to us.
So most of our investors are, not most of them, all of them are high net worth individuals of some sort. So they're going to be an accredited investor. And the types of people that we have as our investors are people who are very high level entrepreneurs and successful and business owners. Those are probably one of the core people that we have. And I think it's because they're attracted to kind of me and kind of my background and my success with business, and they like that. But the other kind of side of it is the investor who is in a W-2 job, but they're in a high paid W-2 job, whether it be as a C-level executive, whether it be as a I could engineer, or whether it be a mechanical engineer or chemical engineer or nuclear engineer. I got a lot of engineers, physicians all across the board, attorneys. So any type of high paid position like that, we have quite a few of those types of investors that are kind of invested in our properties. And the cool thing is that most people that are in those positions know other people that are in those positions. And so when we do get quite a bit of referrals from those people. And we have, I won't mention any names, but, we do have some pretty top level CEOs that are in some publicly traded companies. So there's some publicly traded companies that invest with us, and are not that the companies don't, but the executives that work for those companies are obviously in a high paid position, and they do invest with us, which is pretty cool to kind of see that kind of level of credibility of people wanting to come in and invest with us, kind of see what we're doing. And even like with our Multifamily Investor Nation, of course, we're teaching people how to invest in multifamily. We're not specifically teaching them about passive investing, but our kind of thought process behind that is let's just open the book and teach them everything about multifamily, because one of the entry points for most passive investors is them doing research on how to invest in multifamily. And so they come to research, hey, do I want to do this on my own? And they go, oh, wait, there's a way for me to do this passively. And so they go, once they learn about all the stuff that we're doing and what it takes to do it actively, they're like, holy crap, this is too much work. Here's my money, you do it, right? And so we do get investors from that. But one of the byproducts of that we didn't really see in the very beginning was we get a lot of high-level syndicators and other multifamily operators that want to invest with us because of our credibility and our track record. And they'll do that sometimes either with cash just to diversify, or they'll do it with a self-directed IRA or 401k that they can't invest in their own properties, but they still want to invest with it. And so it's really been kind of cool to kind of see those types of people come in and invest with us as well.
Yeah, I think it's amazing, right? You think about how you can help people, and whether it be the C-suite executive, other operators, newer investors, lots of people who are looking to come in and get into real estate. So great stuff there, Dan. You've got a couple of things coming up, and the one I want to talk about right now is the MFIN conference, the in-person event in Charlotte. Talk to us a little bit more about this event.
Well, it's funny because I know in the green room we were talking about how we were the first ones that did a virtual event even before COVID, and now we're going full circle and we're doing a live event. And I would probably say that in the beginning, I didn't feel like we had enough of a following to risk doing an in-person event. And so that now that we've built out the program and built out the platform, we have over 45,000 MFIN members. We have the ability to attract a large number of people to come to our event that will be live. And it's a very unique event. So this event is not an event that you're going to go to and then we're going to be selling you a high-end coaching program in the back of the room, right? That's not what this is. Now, there are other events that are like that, and I don't think there's anything wrong with that as long as you know what you're getting yourself into, right? There's still a lot to be gained from those types of events. But for us, we don't have a high-end coaching program, nor do we want to have one, because we want to stay focused on acquiring more assets and growing our group. And we can't do that, we don't think, if we're going to be distracted with trying to coach and mentor other people and do both of them very well. One of them is going to have to suffer. And so we just chose that we wanted to not do any high-paid coaching programs and just focus on what we're doing on the multifamily and the rest of the asset classes that we're acquiring right now. And so for this event, it's not a cheap event. You're not going to go there and spend $99 just to get in the room and be sold in the back of the room, right? But we have some really high level people there. There's going to be 60 plus speakers, yourself included. And we have three celebrity speakers. We have Shaquille O'Neal, which I think is there's a lot of people that are looking forward to seeing him. They're like, I just can't wait to see how tall he is, because he's so tall. And he actually has these three people were strategically chosen because they are going to be able to benefit you when you come to this event. Because Shaq is actually a big investor. Like, he has done really well with the earnings that he's had from the NBA, and he's actually got a large multifamily holdings in his portfolio. And so we're going to dive into that with him and talk to him about his philosophy of investing and talk to him about why he invests in multifamily and kind of what his strategy is from an investment perspective. And then we also have Barbara Corcoran. So Barbara Corcoran from Shark Tank, she's going to be there. And of course, she made all of her millions in real estate. And so we're going to be able to pick her brain about what she's working on right now and kind of some things, her thought processes around investing. And then from a leadership perspective, we have Jocko Willink. So he actually is the author of Extreme Ownership and the Dichotomy of Leadership. He's a former U.S. Navy SEAL. And if you haven't heard of him or read those books, you definitely should get those books and read them. They're great leadership books. So he's going to be there. And so it's interesting because everybody like has the one or two speakers. They're like, oh, I can't wait to meet that person, or can't wait to meet that person. But really, we want to be able to create an opportunity for high-level, successful people to get together and network with how to become more successful, help each other out, network and grow together, and then have an opportunity to be able to have the resources there all in one place. And we did it in Charlotte, partially because I'm selfish and I'm in Columbia, South Carolina, and it's one of the easiest places to get in and out of directly from across the country. And it's easy for us to get up there, but also because there never hasn't really been any multifamily type events here on the East Coast very much. There's been a few down in Florida, but really not much much north of Florida at all. And so we wanted to have one here in Charlotte. And so it's at the Charlotte Convention Center, June 23rd, 24th, and 25th. It's a 3-day conference. Starts at 1:00 on Thursday, and then we'll finish it up in the evening on Saturday. Got a lot of great things planned, but it's gonna be an action-packed event. We're really looking forward to it, and looking forward to having everybody there.
I love it. Listen, we're gonna have a promo code there using Casman if you want to save on your ticket there for that event. Make sure you check it out. I will be speaking. I will be attending. I am looking forward to seeing all the speakers you mentioned, including seeing yourself again, so we can see each other in person. But great event. I'm looking forward to it. And Dan, the one thing I'll say is it's value packed. You don't hold back, just like you didn't on this episode, just like in person, you share the information. So if you have been to events where they've told you they're going to teach you how to invest, and all they did was really show hype videos or sizzle videos and try to make you feel good and motivated, but didn't really give you any tools, strategies, or tactics to help you be a better investor, that is not what this is about. You are going to learn from some of the top performers in the industry and get a chance to pick their brain and learn exactly what it is they're doing to grow their business. So again, check it out. MFIN.com or MFINCon is the event. Check that out. And we'll make sure we put a link to that in our show notes. Dan, we're going to go to our round of insights. Are you ready?
I'm ready.
All right. Give me a failure or an apparent failure that sets you up for later success.
Well, it's interesting because, we've had a lot of growth in the company right now. And I get investors that ask me, what is it that you're doing to make sure that you don't grow too fast and you don't monitor? I want to make sure that you're monitoring our investments. And I always point back to a point when I was growing my medical clinics, because I'm a chiropractor by trade, but then I actually have medical clinics where we don't do any chiropractic in them now. And when we grew from 1 to 2, we made a pivotal mistake in taking our core team out of the main clinic, the first clinic, and putting them all in the second clinic. Of course, my thought was if they did really well over there, they're going to make this one be really successful, and that second clinic won't fail. The problem was that the first clinic started to continue to fail when we took them out of those roles. And so for us, what we've done strategically in our multifamily group and our real estate private equity group is whenever we bring on a different asset class, we don't take our multifamily team that does really well with acquisitions, just take them and just push them into self-storage or in hotels or in the express car washes. We hire on a team to actually oversee and manage that particular business unit is what we call it. So we can make sure that we don't take those people and take them out of those different positions and try to put them in a position that makes us so that we lose focus and lose that oversight, so we can make sure that we're monitoring the investments that we have.
There you go. Give me a digital or mobile resource you recommend for your business.
Digital or mobile resource, I would say that one of the one of the biggest things that we use is Microsoft Teams. So we pivoted to that about 2 years ago because, a lot of people, like Slack, right, as a communication tool, but and they also like maybe say Dropbox or some of the or Zoom or whatever. And Teams really gives you that ability to have all of those really kind of in one, because you have OneDrive that's included, you got your email that's included with that, you got the ability to chat via the Teams. You also can share things with Teams. You can also do team meetings. Like we schedule everything on Teams. We have meetings all the time, like this via video that allows us to be able to have that connection, because our entire team is remote. So we have an entire remote team. Right now we have right about 36 different full-time team members that work directly with the corporate side of passiveinvesting.com. And so it's been great for us to be able to have that as a resource to be able to allow us to communicate better in between the different departments.
Give me the book you've recommended or gifted the most in the last year.
So there's actually a book that I recommend all the time, and I love it. It is actually by a guy by the name of Robert Cialdini, and it's called Influence, The Art of Persuasion. And it's one of my all-time favorite business books. And if you haven't read that one, you definitely have to pick it up, because I read that one at least once, sometimes twice a year, especially if you like human social psychology. It really is a great book that kind of teach you a lot of the different things that we do in our group at passiveinvesting.com come from some of the philosophies inside of that book.
What's a daily habit that helps you stay focused on your goals?
I would say spending time with my wife in the morning. So I'm married and I have 4 children, all fairly young. I got an 11-year-old, 10-year-old, 5-year-old, and 4-year-old. And one of the things that my wife and I do every morning is we get up, get a cup of coffee, and either sit on the back porch if the weather's nice, or sit on our couch in our living room and just talk, right? And that's probably one of the first things that we do. It is one of the first things that we do in the morning, and even in the evening we kind of do the same thing. We just, once the kids go to bed, we'll go and kind of relax and just talk about the day and how things went. And so that's probably one of the biggest things that I would say I could point to that has really been able to been a big pivotal, but a really big piece to the growth in our group.
What's your number one insight for investing?
If you from an investment perspective, you have to make sure that you are investing I know everybody says diversify your portfolio, right? But it's not just diversifying and saying, hey, I want to just have different types of multifamily assets. It's also, hey, let's look at the horizon and figure out, okay, if multifamily starts to maybe you don't have as many multifamily investments coming up over the next year to 2 years because of the market shifting that's happening right now in the capital markets from a debt and equity perspective. Maybe you want to look at some other asset classes. And that's kind of why we've been able to pivot into some of these alternative asset classes to allow our investors the opportunity to have some diversification within our group with multiple asset classes that are in multiple markets at the same time.
There you go. All right, Dan, we had you on the show. I looked it up here. It was a few years ago, man. This was back in 2018. So definitely a long time ago. So this is long overdue for sure. But I pulled up your answers to this next question just to see if you give the same ones. If you are in Columbia, South Carolina, give me your favorite place to grab a bite to eat.
My favorite place. There's actually a sushi spot here called Inakaya. And is that the same place?
That's one. You gave 2 last time. That was one. So
okay. Inakaya. I go all over the country, and I always try to different sushi places. And this place is still at the top of my list as far as the favorite sushi places. And the problem is during COVID, they cut out lunches during the week, and they only do it on Fridays for lunch. And then the rest of the time it's just in the evenings. And so it's been a little bit more challenging to get there, because normally I would just go there and have lunch or something like that. But the other place would actually be a Thai food place in Columbia called Mai Tai. So I don't know if that's the second one or not, but okay. I really like a good Thai food as well.
There you go, Mai Tai. So the one you gave last time was Del Frisco.
Well, so you asked in town, I think, right? This time. So in town, those are my 2. My favorite place in the country to eat, I would say Well, I might have to change that a little bit too. So Del Frisco's is number 2, right? So number 1 is actually Delmonico's in New York City. I'm a big steak fan. So Del Frisco's is probably my number 2 steak restaurant next to Steak 48. And then Delmonico's is actually in New York City in Lower Manhattan, right across the street from the stock exchange. And it is phenomenal. So I actually went back there right before the pandemic. In January of 2020 and had a nice steak there, and I haven't been back since. So things are now opening up there. So I'm looking forward to going back up there and enjoying a nice steak up there in New York.
I love it. Listen, Dan, you gave us a great interview, man. Great information, great actionable insights that anyone can leverage for their business. I love how you talked about the growth of the firm, going from, $4 million raised, the hardest $4 million you had to raise in that first year, to 196 million in 2021, with 110 million already after just really one quarter here in 2022. Great insights on some of these strategies and tactics you use to increase those numbers, but also talk to us about the way you connect with individuals, the way you talk to investors, and the way you educate them through all the different platforms. We will definitely make sure we link to the MFIN conference coming up here next month. And we want to make sure people know where to connect with you. So if folks want to learn more about you and connect with your firm, what is the best way for them to reach out?
Let me give you 3 quick ways to do it. So first off, linkwithdan.com. That'll bring you straight to my LinkedIn profile, so you can connect with me on LinkedIn. Second is passiveinvesting.com, which you've heard multiple times during the interview. If you are interested in investing with us, you can certainly head over there. And then the third way would be to follow us on our Multifamily Investor Nation platform. So, I know John just mentioned the MFINCON.com, where you can go and register for the event and find out more information there. You can also just go to multifamilyinvestornation.com and plug in your email there, so you're apprised of some of our future weekly webinars that we have.
Dan, thanks again for coming on Multifamily Insights. We look forward to staying in touch with you, seeing you next month, and staying in touch, man. Have a great day.
You too.